Hi everybody, it's Nima Dogbanin here with Lightning Docs, and I have Ernesto here with RBI. Very excited to sit down with Ernesto. He came all the way out from Florida. And Ernesto, tell me a little bit about yourself and kind of your background. Why did you get into the private lending space?
Hey Nima, thank you very much for having me. Well, I would say that we started in 2015. We come from a family of that has been in the banking business long time in Venezuela. We as a new generation, because of the situation in Venezuela, we came here, started in 2015. And at that time there were many condo developments in Florida where we live. And many foreign nationals, they would need financing for their condos. Most of them, they would come with a 50% down payment and then needed at closing 50%. And at that time, we used to give them this 50% loan, which we did most of them portfolio. We tried to find investors who would find an appetite for this type of loan. And that's how we started. Little by little, a few years later, the institutional market developed a little more. We started to sell one or two to different capital providers. And later, more sophisticated institutional capital came. We improved our processes. We hired new people, and we started different products as well, like construction loans, fix and flips, bridge loans, and that's how it all started in 2015.
And that's really interesting. So you're really coming from a banking background, and how did you make that? That transition's an interesting transition. There's definitely not, particularly in the United States, you're definitely not going to find a lot of former bankers that have made their way into the private lending space, right?
Totally.
So help me understand kind of that mind shift of really becoming an expert in an entirely effectively new space. And what was that like for you?
Well, yes, it is totally different. First of all, the banking school is more of a cash flow school.
That's right.
Totally, where you see the projected cash flow for the property for the investor individually. Actually, the property is something more like a second, like second to underwrite. It's not the main thing. So it wasn't what we were used. I used to work in the commercial part of the bank for a few years before coming and starting to do loans here.
Yeah.
So here is more of an equity underwriting, right?
That's
you
right.
underwrite more
the asset
property,
is first and foremost.
the asset itself,
That's right.
and less the cash flow of the client. And if you underwrite the cash flow, it's going to be the cash flow of the property. Yeah. Usually, you don't go much more than that. That's like the industry standard.
Yeah.
So it was a change of ship. But at the end of the day, I did not longer. I did understand that although it's different, sometimes it's even stronger underwriting. Like, for example, the last collapse was totally relied on cash flow, and when cash flows change, then many properties were underwater. So I think that is a mix. We see a lot investor experience, we see credit score, we see cash flow very general, at least for the property, we do see the cash flow. But at the end of the day, this industry is about equity. What's the asset worth, and how do you see this as an investor of this property, instead of being just like a bank loan where you see independent, like the property from the loan.
And so, tell me a little bit about kind of this RBI, kind of as it sits today. Are you still kind of predominantly, working with the same real estate investors, right? That's kind of foreign nationals. Has the company itself kind of stayed similar in its core? Because just give kind of the audience a little bit of an idea of just kind of the size of the company. How are you guys operating today?
Well, we started at the beginning with a very, very informal company where we used to bring investors that we knew, and we had relations long time in Venezuela and in different parts of the world, but they all live in Miami.
Yeah.
But at the beginning it wasn't so formal. So investors would give us their investments, we would give them a promissory note, and that was it. A few years later we started and we created a fund itself. Mm-hmm. So the fund was a little more technical. We did have the administrator now, and we had the auditor. We used Deloitte always from the beginning. So that was kind of the evolution of that part. At the same time, we also created an independent origination entity. So we separated the two lines of business, where we have the origination entity that only originates and sell loans in the secondary market, and then we have our fund, which is a balance sheet entity that purchases some of these loans. Some of these loans, a specific product, but I would say that 90% of the product from the originating entity are sold in the secondary market.
So that's just, so you know basically at the outset, and you send them down one road or the other, which is, are we going to balance sheet this loan, or are we going to use it for really secondary market sales? Interesting. Okay. And are you still primarily in the Florida market, or is it where do you predominantly make loans today?
Predominantly right now, we are like very active in Florida for sure. We've been there from the beginning. We are in Texas as well, and Georgia, North Carolina. Those are the main markets. But every time we're doing more markets. Right now we're pretty much in most of the states.
Got it. So Southeast for sure. And do you still focus on that kind of foreign national type investor, or is it really kind of broad now, and now it's just it's a much bigger, much more complex business today?
Yes. Well, foreign nationals are they were investors from us from the beginning. When I say investors, it's more like the capital provider and that part of the investor, and we still have. And right now, I would say that we are in a position that most of the capital comes also from maybe family officers or small independent advisors that would refer some of their investors. But right now we maybe went a little bit further down the tier and maybe not only rely on those investors.
And kind of how big is RBI today? I mean, how many kind of average loans do you do in a typical month or whatever? And kind of what's current origination volumes look like for you?
So usually the origination entity right now is currently, which is RBI Private Lending, right now is originating near to 100 loans, maybe a little more every month.
Yeah.
That's kind of the volume we have right now. In terms of loan amount, maybe near to 50 million a month. Yeah. That might be an average right now. And for the balance sheet entity, we have assets under management near to, I would say, near to 100 million.
Right.
Yes, in different structures, but we have the fund, which is the main holder for
That's
these
great.
loans.
And so, you've chose Lightning Docs to be kind of your loan document solution provider. What was your thought process behind it? Why did you choose Lightning Docs versus any of the other solutions available to you?
Well, the story is interesting. At the beginning, we used to rely a lot in attorneys independently. We used to pay for loan docs of every individual loan. It was expensive for us and for the borrowers to pay for these attorney fees in every loan. So we knew that eventually we either need to build something or we need to find something. But a long time ago, I'm even saying maybe 10 years ago or not 10, but maybe 7 years ago, we knew that we needed this product. Not only that, we used to say to our attorney that they need to have
go build it.
They need to have a system. I couldn't go every time to my attorney's office in Florida and see her writing individual documents. She used to write the promissory note, the mortgage. She was very meticulous, and she just did it like that. But when you reach certain volume, I think that is indispensable to have an automation, a system that would help you create the docs.
Well, we appreciate working with you, Ernesto. Thank you for your time today.
Thank you very much, Nima.
Absolutely. Great seeing you.
Thank you.